As the new trading week gets underway, we're seeing flat trading for the major U.S. stock averages. Of course, all eyes will be on earnings report this week. So joining me ahead of earnings week is Peter Cardillo for Standard Financial. Peter, great to have you here.
Good to be back.
Well, as I mentioned, earnings will be in the spotlight this week, but we also have the ECB meeting as well as the OPEC and non-OPEC members meeting in St. Petersburg, Russia. So what do you think will be key for the broader global equity markets?
Well, I think, the market right now is going to depend on earnings. I mean, that's going to be the bulk of the trading this week based on earnings. And so far, we had some of the major banks report last Friday. And, of course, most of them beat expectations, but they were a little bit of a disappointment in terms of guidance. So that probably could be the key in terms of the earnings season. But by and large, I think it'll be a good earnings season. I do expect some disappointments. I think that cost factors have gone up, and that's going to take a little bit of a bite in some of the sectors. But in general, it should be okay. In terms of the macro forecast, we have a very light economic calendar this week. Just basically three indicators that could be looked upon, and that is, of course, import and export prices tomorrow. And then if we have the housing starts, and, of course, the Philadelphia Fed survey. So very light in terms of macro news. More favorable news this week on stockpiles and some real good talk out of non-OPEC members producing, sticking, and possibly wanting to do even more. Should get the price of oil above $50 again.
Well, you covered a lot of ground there, Peter, in terms of what you expect for earnings as well as for oil prices. And of course, when we look at the major equity averages here in the U.S., we are at elevated levels, so the question will be about valuation. But last Friday, we got weaker than expected retail sales as well as inflation out from the U.S. But this week, focus does turn overseas to the ECB and also a little bit to the Bank of England ahead of their meeting in the beginning of August. So what do you see for those central banks?
As far as the central banks are concerned, there's no doubt in my mind that the policy is now shift, and Draghi has made that quite clear. I think as we get closer to September, the argument whether or not he begins trimming rather quickly before the end of the year, I think is the main theme. As far as the Fed is concerned, in spite of the weak economic data, I do not see them changing course. I think they will raise rates one more time. So I think that they will begin trimming the balance sheet probably in September. And I think that they have one more rate hike. And then maybe they might be finished for another 6 months after the next rate hike.
Okay, Peter. Well, thank you so much for joining me at the beginning of the week, and thanks for your insight as always.
My pleasure.